Presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Monday, the 25th of April. And really what we're looking at this particular point is the continuation of the huge sell-off on Friday. A lot of that there was a combination of technical factors, emotional factors, and then every rally that attempted at least to hold for moments got smashed to the downside. So with that in mind, I'm suspecting, and if we're looking at the VIX index, let me just try to get this pattern right here. There. If we're looking to the volatility index, the VIX index, it is trading right now up, let's see, it's up at 30.24. It's up $2 at 30.24 in leg C. In the volatility index, although I put the notations of the Chapman wave down, it's not as important. It's one of the only charts that we ever look at that is an independent to the Chapman wave methodology. Yes, it made a peak E in that last high in 2022. It was at the week of, right there, the week of January the 28th. Yeah, January the 28th. It's 38.94. And remember the following week, it couldn't get higher. It just couldn't get higher. So with that in mind, you've got to be looking at this as saying there is a lot of selling pressure. A lot of the fund managers, as I read it right now, are buying insurance, and they're buying insurance certainly right into the close on Friday, which said that there was a chance that on Sunday night, if we didn't drop sharply, but even held fairly steady, there could be a quick short covering rally this morning. Nope, that wasn't even in the cards. We did get our 9 to 11 point Chapman wave high trend gauge reading on Friday, rally overnight, Sunday night into Monday, but that didn't hold. This is the very moment right here at 10:08. We've had, early on, we had the futures come down. Let me just show you the futures chart. We had the futures come down sharply, very sharply, in fact. I'll show you the 10-minute chart. Click here, right there. There we go. Let's go all the way back here. Let me squeeze this so you can see exactly what I'm looking at. So look what happened in the, what's going on here? There you are. Look what happened in the 10-minute E-mini. This is the S&P E-mini. I've got all the notations there, and then turned around at about 9:35 on the 21st. I think that was that Friday? And then we just went down after that. But look what's happening now. We've gone sideways. We made a peak D in Chapman wave. You're always looking for Ds to say, okay, is this where we get a deeper pullback? Certainly did. You got your peak D in the rectangle formation. Where did I draw that? Oh, this is the 5-minute chart. I said 10-minute, but it was a 5-minute. I've got all the notations on the 10-minute. And then I said, what's going on? Here it is. Look how long we've been in this rectangle formation from the high of 410, that is 410 time on the 22nd. Let me get that right. Yes. So let's go to this one here where I started to draw this in. The high bar on the 10-minute chart at 410 on the 22nd. That's just after the close. We've been in this rectangle formation all the time, except for this little slide that we saw about 20 minutes ago, where we went underneath it. Excuse me. Now we're trying to get back in, and we made a peak D in the 10-minute chart, and this is saying a tremendous amount of the selling pressure might be done for now in this morning phase. And you will know if the volatility index, which is trading at 29.96, up $1.75, high today is 30.56, if it starts to pull back, and this afternoon, Give it all day. This afternoon by 210, 220, if the volatility index has gone below the low of 905 this morning, that's time-wise, that would be 29.04. If it starts to trade under that, finally you could have a little bit of a bounce, and that bounce could in fact increase and start to improve into the close today. I'm not saying that's, I would say two things. In a way, I'd like that, but that's besides the point. What I want and what the market wants are absolutely two separate things. The market is its own beast, and you just got to respect that. All I'm saying is that from my analysis, from what I look at, I think a tremendous amount of the selling has been done on the very short term, not intermediate term, meaning when I say short term, I mean on the daily basis, near term, I should say near term. The short term, there's still a lot. I said April to subscribers, April is going to be a really choppy month. We've built up a huge cash position. we've been long. Some of our longs are still holding very nicely. We got stopped out in our diamonds for nice profits on going up and then on the way down. Gone back into a small position in the diamonds. That's the Dow, because I think that there's a chance now that there's some kind of a bounce. And at this particular level, a 3-point stop on a $34 position instrument, 1%, not even. I'd say that that's okay, just to get a feel. The reason why I want to do it and not go short right now is I think a chunk of the short side, I mean the big whippiness of the short side rather than just the near-term jostling, has been done. And I think there's going to be some upside. But here's the issue. Now, let me get out of this. I don't want to take too long on that. What I want you to do is, look, all those defensive stocks, like a Procter & Gamble. Look, I went through all of these over the weekend. I went through so many. Look, Procter & Gamble. I'm calling this a peak G at 164.90, just under the all-time high of 165.35. These double tops are unbelievable. Look at CVX. This is Chevron. Chevron pulling back really sharply, down 5 today at 155.68. 174, this is 20 points off the high. It just took out all those moves to the upside in the rectangle formation with a double top of 174.76 on the 10th of March, pulls back sharply to 155 and rallies to where? This is these patterns that repeat over and over, I love them. And I don't necessarily go looking for them. They have to show themselves. And then you have to have a lot of them before I actually believe them. But I've been believing for a year and a half. I've been saying, look at these unbelievable V-shaped patterns. It goes back to where? 174.54. What's that? That's 22 cents or 23 cents away from a new high, but 22 cents away from that left side high. Unbelievable. Look at the XLP. Now, I say to subscribers, I wouldn't be surprised, I've been talking about it from last week, that if we start to see the winners, the most recent winners, start to digest their gains. Here we are. This is the S&P Select Staples Spider Fund. Nothing yet to see in the monthly or the weekly because it was at all-time highs just a few days ago, 81.34. But now it's 78.49. I think there's a digestive phase, and that's important. And that goes to Clorox. The question came up over the weekend. When I look at Clorox, but Clorox made a high up around about the 240 area quite some time ago. And now what we're doing is we're looking at it having hit 126. It's actually at 148 at peak F. I'll talk about it. It looks like one of the ones that is slowly improving. I'll be back in a moment. Dow's down 387.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN. educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
We're looking at CLX, which is Clorox, down $1.77 today at $148.88. So, hello, Mr. Chapman. I may not be able to call into your show Monday, requesting you cover CLX for me. Consumer products were one of the strongest sectors Friday, and I was looking for a possible buy around 145 on CLX. Thank you, Greg. So, Greg, I don't remember. I do remember the story as a headline, and now I can't remember the details. And I think it was to do with product shipments or something. So Clorox on the 3rd of February closes near the low of the day at 164.97, underneath the 200-period exponential moving average, not able to fill in a little bit of a gap from a week or so before that. And then must have been earnings after the bell. The earnings come out, and whatever it is, it has a little bit of a pullback, and the next day it opens at 144.92. Remember, it was trading at the close. It closed at 165.34. So it gaps down almost 20 points. Now, what I like to do when I see a huge gap, not a small gap, a huge gap, is I like to make a note of it. I actually make notes all over the show, then I forget to look at them. But usually I try to rely on my memory. Sometimes it works, sometimes it doesn't. But this huge gap has been tested just sporadically with one pop-up to the upside. This is the first time we've had 3 sessions above the trend line support, which is actually now resistance, and that is at 147.99, and we're trading at 148.92. No, I think I'm right. And now what we need to consider is that if you want to get into this position, I think you have to consider it twofold. One is Clorox household products. Why did it not act like some of the other, like a Procter & Gamble? That's probably more healthcare, but it's household products. Nevertheless, up near the all-time highs at 160 right now. 164.90 was the PG high of 3 sessions ago, I should say. And 165.35 was the all-time high. It's got a Chapman falling axe formation. Let's go to another one in the same area. Let's see. So products. Okay, so that's Kellogg's is not really the same thing. Kellogg's just made a leg G, could be a peak G today, but it's in the same defensive area. So here you are looking at Clorox as one of the losers. This is one of the worst performing stocks. So the big thing is, I said, you have to think of it two ways. One is this going to play catch up? That's number one. And number two, it has to go from 149, where it is right now, to about 168, 170 to get rid of the connotations of this huge gap down, and to say whatever happened then is in the past. We're looking at the low that was made around about 128, and now we're looking at the upside. It's a different ball game completely. I don't see that just yet. So here's what I'm going to say. I like the fact that you were talking to me when the stock was in the 150 area. Today it's at 149. Let's see when it gets to the 145 area. I think to nibble, to start your position, just start your engines. That's all. I wouldn't get too carried away. I'd just get my foot in the door and then give me a yell. Let's look at it again. And if you don't want to actually start it there because it's come down, you said 145, but if it in one move, if it slices right through that and goes to the 144 level, I have to then think it through even more. So yes, it's in the right area. No, it's been a laggard, not a leader, although it's had a fabulous move from the low that was made back on March the 14th, March the 14th at 147.02. Type that in. And if you just think of a percentage gain, 147 point, can't be 140, 127. What is with me today? 127.02. Here we are 20 points higher. That's a fantastic move. So yes, ever since that gap, I wonder if that gap, whatever the reasoning was there, you know what? I'm doing something else. If I do my left side, right side price time analysis, and I use this as the plumb line, the 14th of March, I am quite impressed with the action that it's done so far. Yep, I am. I'm going to say that 145-ish area that you were thinking of, I would start I wouldn't get too carried away, but I'd just start a position at 145. And there's a reason for thinking that. Not the monthly chart, that still looks terrible. Not the weekly chart, which has improved a lot. But the daily chart says I'm participating on the upside and now today on the downside in this particular sector. But the sector is still, I wouldn't say that it's the leading sector. I have to give it another few days to see if it has been the leading sector. I want to see where these others pull back to. If it's just a very mild pullback, that's going to be very impressive because then you can have leadership that goes even higher. So that is Clorox, CLX, and I'm suggesting you stick to your plan. I'm not going to change your plan. Just the amount that you get to start off with. Next thing I was going to look at, I had a question about IYR. Now, IYR made a peak G. I'm calling it a peak G top. This is the right here. This is the U.S. iShares Dow Jones REITs index. Now, you would think in this particular environment, with it has property that is income property, that it would be a hot commodity. Well, it's held very, very well. I'm just thinking that if I look at SPG, all of these are in the REITs. The SPG is the Simon Properties. Hasn't done very well at all from the high that was made at about 170 back in the fall of last year, before it too decided to fall, going all the way down to where it is now at 124. If you look at Boston Properties, BXP, I think it is BXP. Yep, Boston Properties, making a dreaded H pattern. And CCI is one that I almost said to we once had this with really nice profits, and I was going to put it in about 2 weeks ago. And then I said, I think this has a chance to make at least a shorter-term double top, which is just done. How many charts have we looked at? Today's high is around number 195. But look at this. The high that was made on the 11th of April was 199.72. 3 sessions ago, it went to 199.97. Unbelievable. 72 makes a fractionally higher high to peak E. What I said to the questioner was, I like the action of IYR, but if you started a position, I wouldn't add to this position until it proves itself. I'd have to give it some room. And the room I'm going to give it is, say, there's a gap that it could fill, and then the high of the bar of the 28th of March at 107.08. I don't mind it going in there for 2 points. I don't know what your stop is on $107 or $108 stock when you got in, but I do call this a peak G at this particular time. 113.13 was the high of the 21st. I think it's making not a potential head and shoulders. It's not a pattern I love, but I do think that it has a chance to go sideways, and then how it holds 106.30 is going to be absolutely fair to watch. So yeah, a starter position maybe, but I'm watching this very closely. I'll be back in a moment. Dow's up. Dow's down. 267. Sorry if I got anybody stirred up there. No, it's down.
The gold market has taken off topside in a large way. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN has just launched their new trading room, the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hello, we're back, and let me see. I wrote down a bunch of things here over the weekend that was asked about that I should look at. Just before I do that, I got a question in about DDD, the 3D Systems stock we once had a really nice run in. 3D Systems once went to 56.50 February of 2021. A little bit of a pullback down to $13.46. Today's low is $13.12. The question is, Any hope for DDD in the future, thinking this story is still unfolding, albeit a rocky road? Well, look at SSYS. Remember, that's that company. This is called, what is this title? It's called Stratasys Limited. They were bought by an American, it wasn't, I think, an Israeli company, bought by an American company. Yeah, so I believe there is a future, and the future is going to be very, very good. But there wasn't competition before. There's a tremendous amount of competition, and some of the biggies are doing it now. Just off the top of my head, I'm trying to think. I'd written it down somewhere. I saw that one of, I'm not sure it's a Cisco. I'm just saying a company like a Cisco that got deep into it. I have no idea if it was Cisco. I'm just saying, but it was a really big company, an old established tech company. So that competition, that type of competition says you might have a niche, but you got to have that niche so that you start to produce really good profits. And if I'm looking at 3D Systems Corporation, it's completely out of favor. If you look at the weekly chart, just making lower lows and lower highs, just constantly. You get a monthly below the left side key support of back in, I think, May, a year ago. May of 2021 at 17.49. As a trade, I think a couple of these stocks are getting really close to a good percentage move. Even here at 13.49, look, what is your risk? If you got in, if you nibbled here at 13.50, don't get carried away with any longs. Just be prepared that this is a very volatile market. I'd mentioned I thought April was going to be very choppy, and we are certainly getting that choppiness. But at the same time, if you think about it this way, it is a very good company. Maybe do a little homework. Maybe just check out the most recent earnings, etc. I know that you like to do some fundamentals, so do some of that. But the most important part is that on a very short-term basis, if it goes from 13 point, I know this is not you. You like to hold it for longer term, but at 13.50 right now, you can make a stop. I wouldn't even go to today's low of 13.12. If you got in now as a trade, I'd have a 35-cent stop. I mean, 35 cents, so 3% or something on the smaller position. Why? Because it could get nicely into on Friday's ugly candle, and even if it goes from 13 to 13.50 or 13.48 right now to 13.80 and closes quite nicely, and tomorrow is an up day, this thing could retest the 9-period moving average of 14.17. And then you can start making decisions. Hey, great short-term gain. What do I do now? Well, let the stock tell you. But if you're asking me longer term, I'd say I believe that longer term 3D Systems is a viable, so far what I've read, I just haven't done anything lately, but what I've read is it's a viable company, a very good company, and it should once again be in the forefront of its area. Does that come from $3 or does it come right now at 13.48? I cannot say. I don't have any reason to suspect that we're getting a major low at this particular time with a flat stochastic in the daily of 5%. But the weekly chart is starting to show some improvement. There's a divergence that is quite important, and that'll show itself if at any point in between now and May the 15th, the week of May the 15th, what is that? That would be the week of the, going into the 13th to the 18th of May. If 3D Systems, regardless of where it goes to in the interim period, if it starts to trade in the 1580 to the 1630 area, that really starts to improve the weekly chart for the very first time. So that's what I'm saying. So yeah, a little nibble at the 1348 right here. I do that since you brought it up. Now, if you're looking at it as an intermediate to Ike, I just cannot do it right now until the evidence is there with higher highs and higher lows, at least in the daily. But it has had the dreaded H pattern. It's closed underneath. It's now back above the left side low. 3D System, DDD. Oh, now it's up 14 cents at 13.51. Let's see, 13.33 was the low of the 15th. Is trading. It closed on Friday at 13.37. So this is the second day that has been above that left side low. That's important on the very short term. So yes, I'm saying, why not, in your position, why not start it here? Don't even think of the longer term. just start it here and see let it prove itself to you. Because if it closes under 12.80 in the next 2-3 days, I wouldn't even want to look at it again for a little while. So this is a really good opportunity. And not only that, I do think the market's going to come back by the end of the day. They've had tremendous selling pressure. The volatility index, I think, is going to start to decline. Famous last words. We'll see what happens there. The question, ARK, ARKK. Well, the DDD, it was. I don't know if it still is, but it was in ARK, which is Kathy Wood's. This is innovation ETF. Trading up $1.64 at 54.10, made a lower low. It looks like DDD. Look, 51.85 was the low of the 15th of March. It ran all the way up to the 72-ish area, 71, 72. Comes all the way back in the dreaded H. It goes from an arch to a cup formation, and then back to an arch formation. Fading, and now let's see, can it produce a cup formation? Look, the number of times you test support on the left side successfully tells you whether or not that is going to act as a support level, because if it takes it out, you know, this thing closes at 50.60 anytime this week. I don't want any part of it right now. It's just no good. So this could be the same thing, ARK, ARKK, Innovation, ETF. We'll see. And it looks like the QQQ is trading up 240 right now. It was up, then it was down. When I spoke earlier on, it was down. Now it's up 244. And this is a successful H pattern. It didn't even get close to the 317.45. And that's the reason I really thought about, with the diamonds, instead of adding new stock positions today, we've got stock positions actually one is still above where we're entered. And that's really one. I'd like it to be an intermediate term long, and the other one is a getting back to normal trade, and that is up nicely. So you've got to be very selective here. I'm not afraid to be long. I'm not afraid to be short, and though we haven't been short, which is a big mistake. I should have. I had the short positions I've been discussing. For how long have I discussed the semiconductor index since it made the top? Back in January, I said, wow, that double top, 318.682 on the week of the 26th of November. Pulls back sharply and then goes back to where? 318.69. I mean, within less than $1 of that all-time high. And now it's tumbling down. Today's low is 232.40 and it's at 237. So this is the first time I'm saying that the NASDAQ is just for me the last 3 hours, going into the end of Friday, going into overnight with the NQs, the futures, and this morning saying, this is maybe the first time I'm seeing some kind of buying that is very selective. I'll be back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Well, folks, we're back. So a question came up, Exxon. I'd like to get into Exxon. I was in it. Where should I re-enter, at least a partial position? So you remember for my webinar that I did for subscribers to my opening call about a week or so ago, I discussed these patterns. The large rectangle where it starts to make higher highs and higher lows can go just under, right on, or just above the previous high of the flagpole. That's peak D right there at 91.51. Let me type that in. Is that the 8th? 91.51. I'll call it the 4-8. I'll check that out in a minute. Okay, and then it comes tumbling down to the 76 level, has a strong bounce, and it goes back to where? It goes back to, change the color right there, and it goes back to 89. So just underneath the previous high, at a peak E, it goes to 89.80. And then it turns around at a peak E and it gaps down today. A sharp move down on Friday, gaps down today. And there's the rectangle that I drew in the weekly chart. And I discussed these patterns and I said this is a potent pattern that says it could remain in the rectangle for some time. If it takes out the high or the low, there's a whole bunch of aspects that we've got to look at. Well, at this particular point, 80.55, after being such a fantastic leader, the MACD is just turning down the weekly chart, but this is Monday, and not an hour, just over an hour into the market open, so it's a whole week to go. But what I am looking at is stochastics at 80%, at 76%, under 80%. On balance volume is good. 9 is way above the 14 in the weekly chart, so it's still active. But on a short-term position, and what I was talking about last week, and I was showing these charts, I showed earlier CVX, I showed, did I do MRO? I did a bunch of these, APA, I think it was. Look at this. It goes peak A, B, this is a C, a D, E. It goes to peak E, MRO is Marathon Oil, spectacular run, C, D, and it goes to E. And there it is. E, and it turns around, and in 3 days it goes. It takes 3 weeks. Actually, it's almost, 3.5 weeks to go from the 23s up to the high of 20, was that 28 round number high? 27.97, just missed it, but it did have a $26 round number low. That's, oh, wow, I didn't see that until right now. And Marathon Oil is pulling back huge. It's down 5.5%, down $1.39. So this is the same thing. So I am looking at this and I'm saying that as far as I can tell, the oil service area is having a well-earned digestive phase. It could be more than digestive, but right now I'm just calling it a digestive phase. So be careful. Where would I get back if I've had huge profits in Exxon and I want to get back in? The best thing I can say is start getting close. It's at 80.57. Maybe one more down day towards the 78 area, towards closer to 78 is where I would just nibble on a starter position in anything new. Now, for some of you also said over the last few days that you've held your core positions in your oils because they've been such great winners. What should you do in terms of entering? And I'm just going to say to you, you don't want to cost average down as it's going all the way back to your opening, your original price. What you want to do is at least take, look, from Exxon, from 89 to 80 is a 10, 11% decline. It's just done that in 3 days. So that means if you had to even buy right back now at this particular point, not ideal, but you just bought it back at 80.80, you've already accomplished what would have been on the upside if you were holding it, a loss from that level. Okay? So now you're ahead 10% of the high that was made. So you can look at it that way and say, hey, I don't mind. I'm way off the top. I'm going to start my position. But if you're asking me what I would do if you're holding a core position, I'd do exactly the same thing as if I've got out of it or if I haven't got in at all. If I haven't got in at all, I'd do the same thing. I'd start a position. It's between 78 and 76. That's the area. Because if it takes that out, it means, be careful. Because the low of 24th of February at 74.03 could be tested very quickly. And in the weekly chart, it looks like that is not an impossibility. It is a possibility. It's been a fantastic move. So that's that. Next question I had was, is that a statement or is that a question? ARQQ, we once in it. We haven't been in since that moment that we got in, we're out. This is Arcit Quantum Inc. When I read this, because this is not in my purview, it's not in my wheelhouse. When I read it, I think, wow, quantum encryption technology platform as a service, making communications links secure against attacks. And here it is. It goes from an IPO down at the 10-ish level, screams up to the 40s, has a little bit of a drop to today's low of $7.40. All I can say is that you've got to skip when you don't understand it. Just do your technical homework because you're not helping yourself by being impressed with the words. I was very impressed with the words. Arcit Quantum, ARQQ, trading up 10 cents at 7.95. So, yeah, this is also, but I would say out of the three that I would discuss, that's DDD. In this case, I'm putting ARQQ because I don't know if it was a question. And the other one was ARKK, which has probably both of them in it. Just a starter position, just a little nibble, because today's the day. Today into Tuesday afternoon, Wednesday morning, absolutely imperative that there is at least an attempt at a rally that fails. We've done that. An attempt at a new rally that is higher but then fails. Done that. And now the third one with no one wanting to get back in for the third time, this is the one that should succeed. So what we're looking at here, and I'll do this as a instead of closing the session out with a quick overview, I'm going to say right now, what I would like to see, Dow's down 270, S&P's down 30, and the QQQ is actually up $1.80. What I would like is, I love that there's leadership. I also love that it's in the Qs. The Dow's playing catch up to the downside of the others. So it's going to be a little bit of a lagger, but let's just use the Dow for the moment because it's the easiest thing to use. If the Dow comes back to about a minus 120 and is holding in the period between 1:40 this afternoon Eastern time and 2:10, and then has a little bit of a dip that looks like, oh man, the fourth or a fifth time that it's going to fail, but instead all of a sudden there's buying. If that buying holds into the 2:30, 2:45 time frame, you could have a really nice up close. That's the only way I can see it, because otherwise we'll just meander. But having leadership in the Qs in Index 100 type stocks is really important. A couple of questions came in. Where did I write them? I started a new book, so I have to find everything. Dow, D-O-W, not the Dow Industrials, D-O-W. And this is what I was saying to subscribers in my overview on Saturday for the market overview. Look, Dow Chemicals, I loved it ages ago. I can't remember. I think we might have got in just briefly, but we didn't hold it. and it screens up to test the all-time high of 71.38 that was made back in May of last year. A year later, after tumbling down to the 50 area, it goes back to where? It goes to 71.86. 50 cents away from that high of a year ago, a cup formation. So now it's pulling back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The gold market has taken off topside in a large way. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Folks, so a question came in. First of all, a statement in the den. Look at Deere, it's down another percentage today. Yeah, we were long Deere. It had a fabulous move up from the 387 level. We entered, it ran all the way to 446.76, and then I raised the stops in some parts of the position, and then we got taken out on Friday. Still for a very nice gain, but this is not a good sign at all. Deere, double topping. Remember, I drew in this left side vertical line. I call it the vertical test. And then the right side, look at that when it went to the 446 high of last week. Was it Thursday or Friday? No, it must have been Wednesday. And this is not good. And not only that, in the rectangle formation, it's gone right back into the middle of the rectangle. So that's what I'm saying. This is very selective right now. We've raised cash. I'm in no rush to put in any long-term positions unless they're in specific areas that are really out of place of what people are looking at mostly. And I just, that's the way I'm doing it. And if it gets taken out, it gets taken out. That's all. But the short side is starting to increase. I should, in fact, have gone on. They didn't have the courage to short the oil sector stocks because they looked like they were really toppy. But you never know. I mean, anything can happen, right? So that's that. Now, my question about Microsoft and Apple earnings, I believe it's tomorrow. So all I can say is, what if we take out the lows is the question. Yeah, that's not going to be good because you've made your arch formation, double bottom potential right here. Microsoft, this will make it simple. What if there's one that's really good and one that's really bad? What if they're both bad, or what if they're both good? We don't know. I'm not sure how good they can be, but Apple has the capability to be able to stabilize and talk about earnings in a much more positive way. Microsoft, I think, is a little bit more vulnerable, and that makes that monthly chart of Microsoft a really important component of both the Dow and just generally the market. So if Microsoft starts to trade, doesn't even have to close, but if it starts to trade, it's at 275 right now. If at any point by Wednesday, Microsoft is trading at 265 or lower, that's just not going to be good for the market at all. I'd love if it can just have at least a pop on the day. That'll be good. And Apple holding very well, but if at 160 right now, if it trades, even just trades at 148 at any point in the next week, that's just not good. So we've got a lot to look for. Stay tuned for Larry Pesavento. I'll be back in a moment for the news.